want to just give a quick round of thank yous to our sponsors. Community America Credit Union, Evergy, and Hallmark. Thank you very much for sponsoring these events. Without their support, we could not do these events. Now it's my pleasure to introduce our speaker who's going to introduce our main speaker, Jackie Loya-Torres, Community Development Director.
Good morning. Welcome to the Casey Chambers 2022 Diversity and Inclusion Author Series. We're so glad that you've joined us. My name is Jackie Loya-Torres, and I am the Assistant Vice President and Community Development Director at Commerce Bank here in Kansas City. In my job, I get to spend much of my time working on programs associated with affordable housing, neighborhood revitalization, and economic development. My particular area of focus is how all of those things intersect with low to moderate income people and the communities in which they live. And that's because at Commerce, we believe strongly that affordable housing is the cornerstone of community stability. We know that home ownership is among the safest and surest paths to building wealth and financial security for American families. One of the things I am most proud of at Commerce Bank is our Neighborhood Connection program. It provides affordable financing that helps borrowers in low to moderate income neighborhoods purchase and refinance homes. We work with nonprofit organizations like Community Housing of Wyandotte County, Chess Incorporated, and Westside Housing Organization here in Kansas City to support their affordable housing initiatives. These things, along with numerous other collaborations, have played a key role in assisting Commerce Bank in earning an outstanding rating from the Federal Reserve Bank for our Community Reinvestment Act compliance for the last 25 years. Another fact of which I'm very proud. Additionally, my job includes shepherding our bank's financial outreach education classes. And our team members have taught numerous financial education classes in conjunction with community partners, such as the Prosperity Center at Rockhurst University, my alma mater, Go Hawks, Amethyst Place, Synergy Services, the Liberty Housing Authority, Money Smart Kansas City, among others. We're also embarking on a very exciting new program, teaching financial education to our newest neighbors, the refugee families from Afghanistan who are being settled and supported by our friends at the Della Lamb Community Services. Financial education also happens to be the topic that brings us together this morning. In this case, we'll be taking a step back to a chapter in banking history that you will likely not find in any history book. We're going to be learning about the pivotal role that strong Black-owned banks played in American cities like Chicago, Tulsa, and Memphis at key moments during the 19th and 20th centuries. For today's fireside chat, we are fortunate enough to have with us one of the nation's foremost authorities on the subject. Tim Todd is the author of a book entitled A Great and Moral Social Force, A History of Black Banks. In addition to illustrating how Black-owned banks benefited community development initiatives, Tim's book also helps us understand how the subsequent dismantling of said banks contributed to the hurdles that many Black, Indigenous, and people of color continue to battle today. Tim, a former journalist, is now an executive writer at the Federal Reserve Bank of Kansas City. This is the 8th book that he has authored on banking history and the 2nd on Black-owned banks in particular. Tim has shared stories from his research at the Smithsonian Institution's African American History and Culture Museum, among other places. Joining him to guide today's discussion is my colleague, Libby Bain, Senior Vice President of Commercial Strategies for Commerce Bank. Libby is also a proud and accomplished alumna of the Greater Kansas City Chambers Centurions program. We can be sure that she has questions for Tim that we will all find of interest. And with that, Let's give a warm welcome to both Libby and to our special guest, Tim Todd.
It's a great introduction. I don't know that I've ever been referred to as an expert on something. So my mom will be so happy to know that I've made that jump. Delighted to be here with you today. I will do a presentation here quickly. Obviously, you've not read the book, but I'm going to talk about some of the issues, which are the reasons why we did the book. And then I'll talk about some of the stories that appear in the publication to sort of give you an idea of some of the things we found. So if we could get the slides up on the screen, and here we go. So the banking system, when you talk about financial services in our banking system, there's a group of institutions known as minority-owned depository institutions, or MDIs. And so what an MDI is defined by the FDIC, is a bank that has a majority ownership by a particular minority group in most cases. There's some other definitions, but that's the most common definition. And these are institutions that generally are more likely to serve a minority customer base. Okay, so the work they do is very important in minority communities. They're often located in minority neighborhoods. And so if you look at this chart, what this shows you is the different types of designations that FDIC uses for MDIs. And the few things stand out here. One is, if you just sort of to explain that line at the top, that is Asian or Pacific Islander American. And so these are kind of clunky categories that FDIC has used for a long time. And so you see that number is much larger than the others. And one reason for that is that's a very large geography defined within that definition. So you've got people from almost half the world encompassed within that. But also you've got significant immigration of wealth into the United States from that category, and many individuals have used that wealth to invest in banks. So that number is a little bit unlike the others. The thing that really stands out here is the declining number of Black-owned banks in the United States. And so you can see 2001, there were about 50. As of today, as of this morning, I think there's 18 or 19 left in the United States. And so that's not really what we've seen happen in other categories of MDIs. And so that was one of the issues at the Kansas City Fed. I'm fortunate my bosses really believe that we need to understand history as we think about some of the problems we face today. So recognizing this is a concerning issue, they wanted to learn more. And when you start overlaying some other data on this or some other research on this, it becomes even more concerning. So you see this declining number of banks, and then you take a look at fully banked households. So what we mean, if you're not familiar with banking, is your household can either be fully banked. So that means you have maybe a savings account, you have a checking account, you do your borrowing through a mainstream financial services provider. Many families are underbanked, so that might mean you only have a checking account, but you borrow money from someone else, maybe like a title loan type situations. Or you can be unbanked, so you're completely out of the mainstream financial banking system. And so if you look at this chart, you can see that Black households have the lowest percentage of being fully banked. So you start thinking about, okay, these institutions are dwindling. The households are below the national average in terms of being fully banked. And then you start talking about some other issues, Black household net worth being significantly lower than the average white household. Black borrowers more likely to have credit applications denied. If your credit application is denied, you're probably going to go to a financial services provider, or what we call an alternative financial services provider. So that's a title loan, what some people refer to as payday lenders. Folks like that often charge exploitive rates of interest. That can introduce a debt spiral, makes it even harder for you and your family to get out of that and to get into a mainstream financial situation. And then also I put cryptocurrencies on here because this is something that I began to notice more frequently in my presentations on this issue over the past year. And we've got some people who have done some research on it that are showing that individuals of color are more likely to be putting money into cryptocurrencies as a means of savings. And so I think that's really a concerning issue. And we've got some people who are looking at that because there is no safety net there when the value of those currencies falls versus a bank account where you have that FDIC protection should the bank come into trouble. So this is something that's developing and we're trying to figure out and learn more about right now. And so as we talk about minority banks, when a minority bank closes, you saw that decline in the number of Black-owned banks. It is very unlikely that they're going to be replaced by another minority-owned depository institution or any other bank at all. So when a neighborhood loses a bank, it is unlikely that a provider is going to go in there. You're probably going to get the alternative financial services provider in that neighborhood. Proximity remains an important issue when people choose a bank. So even though we can do a lot of things online, and we were talking about some of that informally earlier, you're more likely to bank at a bank that you drive by on your commute or is on your way taking your kids to school. That's still a huge issue. And so if a bank is in a community, that can be hugely important to the likelihood that individuals in that community are going to use that bank. Non-local lenders have increased their small business lending. And of course, there's a number of app-based and online services where people can borrow money, but local lenders continue to remain key, particularly to small businesses and entrepreneurs. And then within minority communities, minority banks fill a crucial need. They serve a higher share of minority mortgage borrowers, and they originate a lot of small business loans as well. And they also fulfill some important leadership functions, which we've seen historically. So we'll talk a little bit about now, turn to sort of some of the history that we talk about in the book. And obviously, you know, we'll go through this kind of quickly, but there were some things that we found interesting. And I'll start with, often when I speak to groups and we talk about Black banks, someone in the group will stand up and say, hey, I know the first Black bank was the Freedmen's Bank. And this is a bank many people are familiar with. They may have heard about it. The Freedmen's Bureau, you're probably familiar with after the Civil War. It did a lot of things in the South to help formerly enslaved individuals. It went around and reunited families and provided food to people and did all sorts of beneficial work. Somewhat related to that, although a separate entity, was the Freedmen's Bank. And so the Freedmen's Bank was not a Black-owned bank in the way that we would think of it today. It was also not really a bank in the sense that it didn't lend money out to people to help them, you know, buy a home or start a business or do things like that. So what it was after the Civil War, there were some African-American soldiers on the Union side. And so the way they were paid, one of the options is your pay could go into an account that the government would maintain. And so after the war, either because the soldiers hadn't provided a forwarding address or because they had been killed, there were some leftover funds. And so some folks said, hey, we could use these funds to start a bank to serve these formerly enslaved individuals, primarily out of the South. And so they create this bank, and it is a savings bank. And so we'll talk just for a second. It was possible in some instances, although individuals were enslaved, some were able to accumulate a small amount of savings. So you could hire out your time. Maybe you had a garden, and on weekends you could go and sell some goods. So it was a very small amount of savings, sometimes a few cents or a few dollars. And so the idea was this would be a place where those people could save the money. And so this bank is created, and it is run by Wall Street interests. Henry Cook primarily takes over the bank, has about 61,000 depositors. And what happens is Henry Cook, as the markets begin to turn, and his own bank comes into trouble, he begins to offload some of the bad assets into the Freedmen's Bank and moves things out of the Freedmen's Bank, which had invested in treasury securities and really safe investments, into his bank. And so that's going to lead to the failure of the Freedmen's Bank. And so it basically wipes out the accounts of individuals, literally their entire life savings. So about $3 million was lost. The most that anybody got back was 60 cents on the dollar. And you only got that 60 cents if you went through a process that extended over several years and you maintained a mailing address with an agency and went through a lot of steps. So this is really a tragic event. And so when people talk about the Freedmen's Bank and doing good work, I sometimes bristle a little bit at that because it was far more damaging. And some people, you can read, some historians who look at this issue point to this as a beginning of distrust in the African-American community of financial services providers. I think that is a bit of a reach. There are certainly far more recent instances that would foster distrust in the financial system, and we can talk a little bit about those maybe later. And so really the first African-American owned banks in the United States then begin to form in the late 1800s, and these are the first three Just talk about them briefly. The first bank there, Savings Bank, Grand Fountain United Order of True Reformers. True Reformers was a fraternal organization that functioned much like a rudimentary insurance provider. And so it had chapters, which it called fountains, located throughout primarily the South. Individuals would pay in a small amount of dues, and then that dues money would create a fund that could be used as basically insurance. So if someone had a death in their family or illness where they lost a job, then that money would be allocated to the member. And so what happened is one of the local chapters was having some difficulty. They didn't have anywhere to safely put their money. They went to a white storekeeper and said, hey, we want to put our money in your safe. There was a lot of difficulty there, and they were thinking of disbanding, and they actually reached out to the gentleman who was the head of the organization, William Washington Brown, who was in Richmond. And Brown said, well, wait a minute, we can take this money and we can create a bank, and we can pull the money in from the other organizations, the other chapters, and then we can start lending money out into the community. And so that's really the catalyst behind the creation of that bank. And from that point, you really see Richmond become something of a cradle of Black finance during this era, with a number of other banks formed there as well. Capital Savings Bank in Washington, D.C. was formed around the same time. A couple of gentlemen, Milton Holland and Leonard Boley. Boley was actually an inventor who invented a lot of things that were used by the government, like sorting machines and stuff, which how cool is that? Like, I'm going to be an inventor. Milton Holland was a war hero. And they decided to create a bank there because the changing political environment locally led them to become concerned that there was going to be a restriction of civil rights in the Washington, D.C. area. There were a number of Black-owned businesses there already. They were both involved in business. And so they felt like if we create a bank, then we can continue to provide opportunity even as civil rights are curtailed. And so that leads to the creation of Capital Savings Bank. And then the Alabama Penny Savings Bank, created a few years later, was created by Reverend William Pettiford, who was in Birmingham. And he felt like as that city increasingly industrialized, there were a lot of people coming there taking jobs and earning money, but they didn't have anywhere to save that money. And so he felt like there was a missed opportunity. And so he created the bank for a place where they could save the money and then they could lend the money back out to create additional opportunity. And so all three of these banks have some things in common. So one, they were created with a vision and that they were more than a bank. So none of those founders got into banking because they saw it as a financial opportunity. They saw it as an opportunity for community improvement or protection or development. All three of these banks were really innovative, especially for their times. And so on things like mortgage lending, they were able to do that, offering lower interest rates than many other banks were doing at that time. Adjusted repayment schedules. They even adjusted business hours, recognizing when their customers were more likely to do business. So they did a lot of things that were very innovative in that banking environment during that era. And finally, I think the most impressive thing is how resilient these banks were. So we won't get into the history of the American financial system in the late 1800s, but I will tell you that from about 1873 on, it's one protracted financial crisis. And this is an era when you had very lax, if any, banking regulation. These banks lasted on average 20 years, these three banks. Typical bank of their size in that period lasted about 5 years. So that's a pretty impressive when you think about all the innovative things they were doing, all the headwinds they were against racially and economically, and they were still able to withstand that and have a 20-year lifespan. And from these first three banks, then you see a rapid growth in Black-owned financial institutions in the United States. There's about 60 in business by the time of the Great Depression. And these are some of the key locations. Of course, Richmond, Virginia, as I mentioned, really the cradle of finance. Oklahoma, which we'll talk about in a second, places like Chicago and Philadelphia. Oklahoma is an interesting story and particularly of interest from our part of the country, because I find a lot of people are not really familiar with this story and they sort of wonder about the African-American connection to Oklahoma. And so this is Pecan Street, which was the main street in a town called Boley, Oklahoma. After the Civil War, formerly enslaved individuals basically had some options, right? They could stay in the South and try to get a job, maybe farming, or move to a city like New Orleans. Many moved to a place like Richmond to help work in construction there. Some went north and began to seek their fortunes there, but a number of people headed west. And there was the idea of creating a Black area in the United States. It was very controversial. People argued vehemently on both sides of it. But because of its proximity and because of some of the opening of the land, the way it was being handled with the Native Americans and how the government was treating it as a territory, a number of people actually went into Oklahoma. And so you can see here the number of all Black towns that were created in Oklahoma in the late 1800s into the early 1900s. And so one of the key communities in this area, and a city that was actually known nationally, was Boley, Oklahoma. When Boley, Oklahoma was created, its financial base was the Farmers and Merchants Bank. And you can see there DJ Turner, who was the founder of it. So I think of Farmers and Merchants as being a new kind of bank, a new kind of Black-owned bank. So the other banks that we talked about, as well as others that were forming at that time, were very often affiliated either with a fraternal organization or a church or some other established group. But in this case, DJ Turner comes in, he opens a bank, and basically it's going to be reliant solely on the community that is at that time being developed. So he has $500 in capital. He opens the bank and it becomes a driving force for development in Boley, Oklahoma. There's never been an enterprise that has succeeded at Boley without Turner's cooperation. So you're saying, well, what did Boley become? Well, Boley, this is the Masonic temple that was built there in 1915, was allegedly the largest building maybe in the entire Oklahoma territory at that time. It had 82 businesses by 1920. You can see the list of some of those there. It becomes a very well-known place nationally. So you can go back and you can look at the New York Times and you can read about Boley and what was going on there. The National Negro Business League actually goes there twice by train and has its national meetings there. So this is a major community at that time and a place that gets a lot of attention. And so that's really sort of reflective of the work Turner was doing to help finance this community. Now, when we talk about, just to sort of I guess I should wrap up Boley and tell you why you haven't heard of Boley today. So what ends up happening is they had 3 cotton gins there, but several things happened around the same time. So the cotton crop went bad, so they didn't have a crop. Cotton was seasonal work. So when they weren't able to gin, there wasn't a place that could employ primarily, they wanted an employer for young men. So they didn't have a year-round employer for young men. Automobiles started being developed. You had the increasing industrialization of the North. So a lot of people left Boley and headed north. So it kind of got hit from all sides there. They struggled to try and get a major manufacturer in there, recognizing that the future didn't look bright for them and they were unable to do it. So today, Boley's a very small town. I will also tell you, though, Muhammad Ali actually considered having one of his title fights in Boley to try and draw attention back to that community. It's kind of an interesting footnote. So we talk about Oklahoma. Of course, people today versus a few years ago even are much more familiar with the story of Tulsa and the tragedy that happened there and the horrible violence of 1921. And so I think it's interesting that even though Tulsa is known as Black Wall Street, there were no Black-owned banks in Tulsa. And so I was really shocked to discover that. And so we spent a lot of time and worked with some people in Tulsa, and they dug up old business records and we cross-checked addresses. We really invested a lot of effort in making sure we were accurate on that. And so as we thought about it, so then why would that be the case? Well, Tulsa had an oil economy. And so generally in the US, historically, if you go all the way back to the colonies, banks have developed in places where individuals don't have a lot of wealth. So they have to put their money together to lend it out to foster opportunity. And that wasn't the case in Tulsa. Pretty much everyone on a relative scale was pretty well paid in Tulsa because you had this oil boom that was going on. And then you had a couple individuals, J.B. Stratford and O.W. Gurley, who came in. They primarily developed the Greenwood neighborhood. So they self-financed much of the development there. They're basically real estate developers during this project. So that credit was being provided by other sources that previously would have been provided by a bank. What is interesting about Tulsa, so after the events of 1921 and the community's decimated, when we see tragedies today, people will say, we'll send money to such and such bank and they will distribute it. It was actually that bank in Boley that administered the funds to the individuals and families in Tulsa. So people nationwide sent their money to Boley and then it was forwarded on to Tulsa. So we had this 60 Black-owned banks at the time of the Great Depression. We get through the Depression and there's only 8 left. And so we could talk about this also for a long time, but basically throughout US history, Black communities have suffered disproportionately in times of financial crisis. And that was certainly the case here. And so that leaves the country with only 8 institutions. They continue to do business for a while, and then we see a rebirth in Black-owned banks during the civil rights era, particularly in places like Detroit and Memphis. And so we'll look at Memphis. This is Tri-State Bank when they were opening what was going to be then their new headquarters in Memphis. Tri-State was founded by Joseph Walker. One of his key employees and a real leader at the bank was Jesse Turner. This bank opened in 1946. It was the first Black-owned bank since the Great Depression. So this was really marked the rebirth of these financial institutions. Joseph Walker opened this bank because his son was denied a small loan, and they were outraged by that. His son had a good credit history, had borrowed money previously, and so they engaged in banking. The Memphis Tri-State Bank is very important significantly. In 1955, there was an economic freeze in Mississippi. This is right after Brown versus Board of Education. This is around the time of Emmett Till. This is the time of all that is going on. All those horrible events are going on. The economic freeze, while people might be familiar with some of the activities of the Klan during this period, basically, the economic freeze was administered by bankers and other individuals of wealth. And so what they started doing was calling in the loans that they'd made to Black individuals and families, primarily farmers in that area. And so they were squeezed for money. And so what Tri-State does, they're just across the state line. And so they begin loaning into this area. And so you can see the quote here about the work they did against the economic freeze. Jesse Turner becomes he goes with Walker, helps start the bank, becomes CEO and leads the bank. He's involved in at least 2 civil rights cases that granted equal rights. One of them related to airport restaurant. So everyone be able to eat together in a public place in that restaurant, and then also with the local library in Memphis. So the work they did is really phenomenal. They would help bond individuals out if they were arrested during a civil rights protest. Martin Luther King, they were involved with him and his legacy after his assassination. Really did a lot of work. Phenomenal institution and some phenomenal individuals. And so the number of banks continues to grow. After this, we end up with about 50 in the mid-1970s. And then those numbers start to decline again as we see financial crisis in the 1980s. We end up with around back to 50 in 2020. And then you see the housing bubble and the collapse and the decline we talked about earlier. And so just to kind of wrap up, people sort of often ask me like, well, what does this mean for the future? What do we learn from this? And I think just some things to think about. We make no illusions that we have all the answers, right? We're trying to foster a conversation here. We think there's things to discuss about bank structure, size, and its ability to expand economic opportunity. So one of the problems in the late 1960s, early 1970s is people said, well, these banks are all small. They can't make difference on a large scale. But that doesn't matter, right? If you're still a small bank in a small community and you're making a difference in that community, that's hugely important, right? So sort of think about how can banks be brought in to make differences on a larger scale and sort of some of how the mechanics of that would work. There are mission-driven lenders and CDFIs out there, community development financial institutions that are doing a lot of good work right now. Their numbers are growing currently, and they're doing all sorts of things here in Kansas City and in many communities across the United States. One of the things the book talks about quite a bit, or that we found, is the important role of community leadership as you sort of think about a bank beyond just a provider of financial services. And I guess I shouldn't say just, that's an important mission. But there's a lot of things a bank does just by being in a community and providing leadership and providing a voice through that community. And for example, you see that historically in Chicago at times of racial violence there, you saw the bankers really step up and provide for the community. And then I think the most important issue as we look at today, and we're actually having a conference at the Fed about this next month, is banking sector diversity. And how can we bring more people, more minorities into banking? And that's all of us, right? So that's any bank here in Kansas City, that's the Federal Reserve, that's the FDIC. We've all got to do better. And when I talk about diversity, I also want to emphasize that I hope those of us in banking also recognize that we need to think not just diversity along racial lines, but also sort of diversity in what motivates people. So by that, I mean, if you know someone and they are, really interested, there's a big public service component to lending in a community. And so individuals who are motivated by those types of things, I feel like those are the people we need to be bringing into financial services. And we can teach you what's a good loan and what's a bad loan and how to do the finance, and we can teach you the math. But if your heart is in the right place as far as how do we help a community, that's the type of people we really need to think about bringing into banking. I sometimes joke that when you say the word banker to people, they sort of imagine like the guy from the Monopoly board, right? But that's not really a banker. Like, that's not a community banker. That's not the people I think of when I think of banking. And so how do we bring in those types of people into banking? A lot of those people are taking jobs at CDFIs right now. We need to bring them into banking, into that environment, and really think about growing our communities. And so finally, here's some resources. The Great Moral and Social Force we're talking about today. Let Us Put Our Money Together, a book I wrote a few years ago, which is really just about those first 3 banks. And then I was overwhelmed and honored to do an event with the Smithsonian earlier this year. And so you can go online and you can watch the video of our discussion of that. These books are available free from the Kansas City Fed. We actually brought a Great Moral and Social Force with us today. And so there's a number of copies in the back if you want to grab one, or grab 2 or 3 if you've got some friends you'd like to share them with. And with that, my gosh, I need to stop talking. So let me come on up. Let's have a conversation. We'll have that awkward silence.
All right, good morning. Well, I'm Libby Bain, and I'm excited that I was asked by Commerce to join this discussion this morning. I read the book over the last few weeks, and I thought when I first picked it up, I was like, I'm going to read a book about banking. And, for me, and maybe, I don't know, Tim's a journalist turned Federal Reserve banker. That might have sounded pretty exciting, but I wondered what other people might think. And really, there's not much banking, really. There's a lot of stories, like Tim said, about how involved these people were in the community and how they were working to make change in their community. Just a lot of inspirational. So I would definitely recommend grabbing that copy at the end. But let's talk a little bit more, Tim. So this is your second book, as you mentioned. How did you really get into this line of research, and what's kind of your passion behind it?
So my job, I do historical research at the Fed, and then we sometimes publish books, or sometimes it's a paper, or sometimes it's just for an internal audience for our own understanding. And so I've been doing this. I originally started with the Fed in 2002. And initially, a lot of my research was about central banking issues and monetary policy history, and sort of, we did one about how the Fed communicates now versus how it communicated then. We looked at the 1992 presidential election and the Fed around that, and some of the issues with Bush and Clinton. We did a lot of things on regulatory. So anyhow, through the course of all this, I would from time to time come across a snippet, a newspaper article about a Black-owned bank, and it would say something like one of the banks in Richmond during a banking crisis. It was actually a Black-owned bank. The school district had to go there. It was the only bank able to cash checks at that time. So even though the students in that school were white, they were going to the Black-owned bank to be able to cash their checks. So I was really interested in that. And so I just kind of wanted to learn more. So I went to Amazon and thought, well, I'll just order some book and I'll read it, and that'll be that. And there wasn't a book. And so one of the things they tell you when you're a writer is if, you want to read a book and no one's written that book, you should write that book. And so we started digging into that history a little bit, and it was just, we didn't know what we would find, and it was fascinating. And so we published the first book, and it was really a surprising experience for me, because I would go and talk with people who were either, deep in the financial services sector, or they're economists or whatever. And I would talk about, and then the Fed moved the Fed funds rate 25 basis points, and this happened, right? And so now I'm telling stories about Black bankers, individuals, families fighting against oppression and racism and all the things that go with that. And people were coming up to me with like tears in their eyes. And really, and I was like, well, yeah, duh. And so then they started saying, you got to keep going on this history. Nobody knows this history. This is important history. You got to keep going. And so then we wrote the second book, looking at some additional communities and trying to tell some more stories there.
Speaking of that second book, I mean, how did you decide on the title?
Yeah, so the title, A Great Moral and Social Force, is actually about William Pettiford's bank in Birmingham. And so when he created that bank, one of the things, the things I talked about, he saw opportunity was being missed and all that. But one of the things that also inspired him was there were a couple small children whose their parents had died. And so the family had some money, but they weren't able to pass the money on to their children because they didn't know anybody within their circle who could post a bond that was necessary to have access to that money. And so these two kids are orphaned and they don't have any ability to access what wealth their parents did have. And so one of the things that inspired him is, well, we create this bank, we could have been there for this family. And so there was an article about his bank and said, a banking institution can be a great moral and social force. And when I read that quote and I recognized the history of these banks, I felt like it really described the types of things they were doing, right? They weren't there coming in saying, how are we going to make money today? They were, how are we going to help the community? And I thought that really, really got to the heart of it.
Yeah. And so speaking of, how in that case they helped the community, what were some of the other individuals like? They were doing multiple jobs. Like I read these people they were doctors and lawyers and dentists and also running a bank and doing civil rights work. Can you talk about some of those individuals?
Yeah. So a lot of pretty much across the board, these bankers came to banking not as, I want to be in banking. They had been successful in something else. So if you look at like Don Davis in Detroit, he's running a recording studio there. He was a guitar player. The first song he played on was that song Money, and it's like this, and then he's a banker, right? He runs this recording studio, successfully gets into banking. After some recording artists basically kick him out of the studio and say, stop trying to take over our recordings. You had Jesse Binga in Chicago in the early 1900s. Jesse had been involved in real estate. A lot of people would move from real estate into banking because as someone in real estate, so he was a landlord, a real estate manager. So he would be most likely the wealthiest person that many of his tenants would know. So he would either be asked to extend credit because someone couldn't make a rent payment or because someone, my kid is sick and I need money. So people would come to Jesse and ask him for that. And so he sort of gets into banking and recognizes this opportunity. And then he ends up being called like the father or stepfather of the South Side of Chicago because he finances so much that happens there. So they come from a lot of different backgrounds, but they're all sort of drawn to this same idea of community service and how can we help the community.
Yeah. And I remember that in reading the book, there was also a female banker. Could you tell us a little bit more about Maggie?
Yeah. So Maggie Walker, if you have heard of any Black banker from this period, it's most likely Maggie Walker. And so Maggie Walker was with a organization called St. Luke's in Richmond. And they were primarily a women's organization. The organization was in a lot of trouble. Maggie was really a force of nature in that she came on as treasurer, helped fix the books. They ended up creating a bank very similar to the True Reformers Bank. She works a lot with women who work within the group. So St. Luke's ends up having a store. They have all these other operations, but she employs a lot of women. And the first thing she does is she goes to them and says, you're going to get a bank account. Right. So right from your first paycheck, and you think today, well, you sign up for the 401k or whatever, right? That's not how it worked in that time. And so she was very insistent on those types of things. She was known nationally, got a lot of attention. People said she was the first female banker of any race. I've talked to people. You can go to Richmond and tour Maggie Walker's home today. And anyhow, you talk to people there and they're like, well, there was maybe some promotion involved with that. So she was a savvy marketer too. But she was a figure on a national scale. I do recommend if you're ever in Richmond to tour her home and you can walk through that, what's called the Jackson Ward neighborhood there, which they're attempting to revitalize right now.
So early on in your discussion, you mentioned that a lot of people point to the failure of the Freedmen's Bank as kind of triggering some distrust in the financial system. But you mentioned that there's maybe some other instances that you think contributed to that. Would you share some of that?
Yeah. So let's say, I won't name any names. There's some banks, though, that are certainly in the news for some of the issues they've had recently. Probably the most prominent example, though, that we've seen in the last 20 years would be around the housing bubble and crisis, where we saw Black communities, again, suffer disproportionately. And there is some research out there that has suggested that the individuals who suffered, who had these homes, who were sold these horrible, loan products and mortgage products, one of the reasons they were victimized or more likely to be victimized is because they didn't have a mainstream banking relationship, because there wasn't a bank there. And then someone shows up and is offering them what appears to be a good deal. They've not been able to develop a frame of reference for what is a good deal because there is no bank in the neighborhood, because they've been outside the financial system. And so there's some research out there that suggests possibly some correlation there. But again, as we've seen time and again, if it's 2007, 2008, if it's 1980s, with inflation and some of the banking crisis, if you go back to the Great Depression, time and again, we continue to repeat these same problems and see the same communities suffer disproportionately, even with COVID, to bring in another area.
So you also mentioned in your presentation, there were 50 Black-owned banks at one time, and now we're down to 18 or 19 maybe as of this morning. Yeah. And so what has happened more recently that has caused that decline and for us to end up where we are?
So a few things have happened. You have had some acquisitions. Liberty Bank out of New Orleans has acquired some other banks. Liberty is the Black-owned bank in New Orleans. And really, I believe it's either the largest or second largest Black-owned bank in the United States. So it has acquired some banks. Other banks have been acquired and taken out of the MDI category. So one of them was acquired by some guy who's like trying to start an online bank. He's a white guy. He went in and bought it and pulled it out of the MDI category and is now trying to do something else. You also had bank failures. So when you think about a bank as a catalyst for a community, it is also reliant on its community. So when that community suffers, that bank is going to suffer, right? So you saw failures around 2007 and 2008 also. So basically anything that can happen to a bank that can lead to its demise has happened, just in greater numbers, I guess you would say, or in relative terms at least.
So some of these leaders that created these banks really had that moral or social impact on their communities. Can you say some of the ways that the Black-owned banks help save their communities?
So when I think of saving a community, I look at the situation in Chicago in 1919, where you had a young man who was killed in Lake Michigan, and there was violence on the beach, and there was all sorts of racial violence spreading through Chicago. And you had 3 Black-owned banks on the South Side at that time. And so what those banks began doing, people were afraid to leave the neighborhood, scared literally for their lives. And so it was the bankers who basically said, here, you can, we don't know how much money you have on account, or maybe you have money on account at a bank in the Loop, but you're scared to go there. We'll trust you. We'll trust your check. And it basically ended up destroying 2 of the 3 banks. Jesse Binga, who I mentioned earlier, he was well connected. And so when people were scared to leave the neighborhood, Jesse was able to use his resources to get actually truckloads of food and supplies brought into the neighborhood to basically help them survive at a time when it was exceptionally dangerous to leave the neighborhood. And just to point out, sometimes I think it's easy to overlook, Jesse Binga took great personal risk every day of his life. He was a very prominent Black man who was wealthy in Chicago at a very dangerous time. And so his home, his office, I think there were 7 fire bombings at different times. And so people went to him and said, Jesse, why are you sticking around? And his comment was along the lines of, if they can make Jesse Binga move, they can make anybody move. So I have to stay, I don't have a choice. And so, when you see that, that sounds like a banker. That really tells you where his heart was at in that community.
Jesse took a lot of risk, but even some of these first depositors, when these banks opened, took quite a bit of risk. There wasn't the FDIC. So, they kind of had this shared vision. Can you talk more about that?
Yeah. So it's kind of wild, but, for a good chunk of U.S. history, to be a bank, there's sort of a joke. You write the word bank on a piece of paper and you stick it in the window and hey, you're a bank, right? So it's totally unregulated. And so, you have these banks, these private banks. And so people really were taking a risk putting their money there. Recognize that if that bank fails, if that banker goes out and makes a bunch of crazy loans or just sticks the money in his pocket, you might come back tomorrow and that sign that says bank isn't on the window and the banker is gone. And so you really had to believe and be part of the community and really understand and have faith. And as I mentioned, in the late 1800s, a bank lasts 5 years. People were like, that's a pretty good run. And so the idea that these banks would remain viable is really exceptional and speaks not only to the bankers, but also to the communities and their faith in these institutions and the recognition that by coming together, they could be more than they could be individually.
So speaking of the communities, so we're here in Kansas City, and there wasn't necessarily a chapter on this community. Can you tell me how you chose the cities that you focused on? Yeah,
so when we started, I thought we were going to write about Kansas City. So the idea was people wanted us to move the story forward. I didn't want to write something that was sort of a dry, and then there was this bank, and then there was this bank. Like I wanted to have a story that would bring in people who aren't in banking. And so I went through and I tried to identify, if we bring the story forward, if we start in Richmond, then what are the key cities as we think of the Black economy moving forward in time, right? So we go from Richmond, and then we're going to go to Oklahoma just because it's such a fascinating story that a lot of people are unaware of. So that's going to be, sort of that post-Civil War period. And then, of course, you have the migration, the industrialization, in Chicago, you have civil rights era. Of course, you think of Memphis and the bank's hugely important there. And then you move to sort of the late civil rights era, you look at Detroit. And so it sort of hit on those cities. There are other places we could have looked. We could have looked at Philadelphia. We could have looked at Washington, D.C. Kansas City, Henry Sewing established a bank here. Not long after Tri-State was established, and we will probably end up doing something about Henry at some point. I thought he was going to be in the book, but then it just sort of didn't fit in enough with sort of that Chicago narrative, and it sort of detracted from that. So that's sort of how we chose the cities. There are definitely other banks we could have looked at.
So you talked about the wealth gap and kind of the disproportionate number of Black households that are underbanked or unbanked. Is it impactful to have more Black or people of color individuals in the banking system?
Yes, I think that is hugely important and something that all of us have a responsibility to try and bring about for all sorts of reasons. I think probably most of us in this audience are familiar with the data and the research on diversity and diversity of thought and diversity of experience and why that is so important. And I think just having people, I hope I'm not stealing from your next questions, but as you look at like online banking, right? Like you can go to some app-based product and whatever. It's important to have people in neighborhoods who are familiar with neighborhoods, who know that we need a grocery store on that street corner. Or if we had a restaurant down here, it would be successful because there's not anything around here. And so I think it's really important to have people who are really part of the fabric of a community and of a neighborhood involved in banking, regardless, even aside from race, just to be part of that.
So you brought up online banking. How has that online banking and digital banking, all of us having it in our pocket, how has that impacted Black-owned banks specifically?
So there is some data that has shown that money is from the African-American community is moving into online banking. And so there is, you may have heard of Greenwood, the app-based bank, which has gotten some attention. It's kind of drifted out of the news, but it was something that the rapper Killer Mike and Andrew Young, former mayor of Atlanta, were starting. I can kind of go either way on something like Greenwood. So first of all, Greenwood is not a bank, right? It's taking deposits and it's depositing that money in a bank. It's not holding that money in its own account. So that's one thing to know about it. The second thing to know about it is that it is not, because it is not a bank, it is not lending money right now either. So on an individual level, if you are unbanked or if someone is unbanked, then something like Greenwood or some other app-based product is probably a good step, right, to get into a mainstream financial type environment. That said, it's a good step. There's another step you can go where when you're putting money into an actual bank, then that money is being lent out, that money is creating opportunities and all those types of things. So even though some of these online things, I think are good individually, I think collectively, there's an opportunity that may be missed here, depending on how this technology unfolds.
So one of the services you spoke about that a lot of these banks provided was mortgages for Black households. So can you expand on what happens in Black communities when banks that provide these types of services or even business lending disappear? You said a little bit about it.
Right. So yeah, they're going to be vulnerable to all sort of exploitation, which we have seen. We saw it in 2007, 2008. And, and the book gets into some of the history of redlining and blockbusting and some of those things that went on and how that economic opportunity is lost and the challenges then it creates as far as how can you reinvest because of the way these properties are handled within a legal structure and all that. I mean, all these things are kind of interrelated. And that's, we wanted to tell a story about the banks, but we wanted to show more broadly sort of some of these connections. And so I hope people will gain maybe a more complete understanding of some of these things or some of what they've heard.
So moving kind of to the future, what is something that small businesses, large businesses, anybody in this room, we've talked a lot about banks and what we can do. What can other businesses do to have a positive impact on primarily Black communities?
So one of the things, when I talk to people and even people who worked on the book project, we worked with some couple people out in New York on some things, and it was like when we were talking, a light bulb went off that they hadn't thought about, when you deposit your money in a bank, you are making a decision. Okay. So you may choose a bank, a number of years ago when I moved to Kansas City in the 1990s, I chose a bank because it was down the street, it was like next to the grocery store I went to. Right. And so it was convenient. I'd go in there, deposit my paychecks. Now I wouldn't even have to do that. It's all online. But you're really making a decision. And so if you think about like in a pre-regulatory environment, you probably would have been much more aware of what your bank is doing with your money in 1925 than you are today, right? You wouldn't have gone and put your money in a bank if it was doing all sorts of crazy stuff, because without an FDIC, without deposit insurance, when that bank goes under, you're going to lose everything, right? Or everyone's going to go run. You have a bank run. We all go stand in line and you're at the back of the line and you're like, there ain't going to be anything left for me. So today you don't really have to think about those things. And so, but when you're depositing money, you are potentially creating an opportunity for someone else. So I think people should think about that when they deposit their money. If you put your money in a bank, are they reinvesting it in my community? Are they reinvesting it in, New York City? Are they reinvesting it in LA? Like who's borrowing money from this bank? What type of risks are they taking? What's important to this bank? People don't really think about that today. And I think it's very important to think about that. So what is the greatest insight that you realized out of your research? I think the thing that I really, take home from all of this is just how inspirational these individuals are. We were in doing this work, just to be really sort of blunt about it. Like I felt a lot of pressure to make sure we told these people's stories the right way, because in America, we don't really know Black history, right? So like, Frederick Douglass, MLK gave I Have a Dream speech, maybe, Booker T. Washington, right? That's what you learn in high school. And so like you go to a town, here in Kansas City, and we're going to name a street or whatever after Martin Luther King. Well, there are a number of, Black individuals who are very prominent in this community. Like, why aren't we naming streets after them? And so it's like, how do we tell these stories and make sure we tell these stories right? I don't know if I'm really answering your question or not, but that's the thing that struck with me is like, there's a lot of people who have sort of been not forgotten, but a lot of stories that need to be told.
Yeah. And I would say as a reader, that was probably my biggest takeaway too and I told other people that was more of the stories of these individuals and the links that they went through and the risks that they took. So it shines through. So what I want to tell the people here, we're going to be getting ready to ask you or hear your questions as well as from anyone online. So you can start getting ready for that. But I did want to ask one question, a final question to you, Tim. What's next for you? What's your next research project?
So that's kind of been a challenge because I've been doing a lot of events related to this book. So there's a couple things that I'm thinking about. We need to learn more about Henry Sowing's experience in Kansas City. I have sort of played around in my mind. I mean, none of this is really sort of at the official stage, so take it for what it's worth. I'd like to start doing some kind of podcast talking with people who are actually involved in serving communities and trying to start bringing attention to the work they're doing. So that's everybody from Alden McDonald, who was really the founder and the leader of the Bank in New Orleans, through people who are working in CDFIs here in Kansas City. And so how can we bring more attention to their work? The minute we published the first Black banking book, people asked for something about Native American banking history. And so I've been spending a lot of time in Native American history lately. It is, as I'm sure you can imagine, hugely complex. From a just sort of how do you research it aspect, it is very difficult. One of the things that allows for projects like mine to go forward is that you had Black newspapers on the south side of Chicago, and you had multiple Black newspapers in Richmond when it was really its height as an economic hub. And you had, the True Reformers published a 50-year book volume on its history. So you had those resources. In Native American history, the Navajo Reservation is, where is it? Wyoming, Arizona, they're pushed to the margins of society. And so there haven't been communities that have developed in the same way that have the newspapers and have that community. So just sort of the blocking and tackling of research is very difficult on that topic, but we're making some strides and we're learning some things. And we've definitely uncovered things that people were totally unaware of that have been all but lost to history. So about some early banks. So it could be exciting. I don't know that it will be book length though.
Well, it sounds exciting to see what does materialize. So I wanted to open it up to our audience for questions. So Greg or Danny, do you have any questions?
Tim, we do have some questions online. We're going to pull up a slide because it refers to one of the slides from your slide deck.
Yeah.
And it says, is this MDI for any particular bank or nationwide?
So this is nationwide. So these are the numbers of MDIs nationwide. So a couple things I would just kind of note here to round out this research is recognize that even though most MDIs serve primarily a minority base, are located in a minority community, that is not the case with all of them. So for example, some banks very aggressively promote the fact that they are, let's say, a Native American bank. Others don't aggressively promote that. So there's all different types of banks. One other thing I would say, the slide we followed that with, and again, one of the challenges is, if you go to the next slide, is you'll notice that when we're looking at household banking use, Native Americans aren't on that chart. And so there is a real dearth of data right now on Native American financial services access. And the Fed, my counterparts in Minneapolis, have been trying to address that. And that's another issue, though, where we don't have the ability to sort of gauge the environment today. So.
Looked like Jessica, you have a question?
Yeah, hi there, Jessica James. I'm a non-banker and I enjoyed your presentation today, so thank you. I look forward to reading the book. But I had a question. We've heard recently with kind of this housing boom over the last year and a half about discrimination in house valuation and appraisals. Can you talk a little bit about that and maybe what role the Fed is playing in addressing that?
Yeah, so I don't know. People may have seen the story the other day about what they whitewashed their house. Yeah, it's incredibly troubling, obviously. I don't know what role the Fed can play as a banking regulator. I think when we look at, lending and, when a bank makes a lending decision at the valuation of a house, but I think that's something, obviously hugely troubling. If you haven't spent, so I grew up in a white small town, right? I'm not stupid. I went to college, whatever. If you haven't really spent time really getting into America's racial history, you should, because it will really help you understand a lot of things. If I was going to recommend a book, that's not a book I've written. There's a book called The Sum of Us that some people have read. And what it really talks about is many instances where the white community has basically made things more difficult for itself rather than being willing to share. For example, small towns where we will close the pool before we will integrate the pool. If you look at the history of the True Reformers organization that I talked about that created the first bank. So William Washington Brown created the bank, but he created the True Reformers group. The True Reformers was a fraternal group, but it was originally like a temperance group, right? Because we don't want anybody to drink, okay? So the reason he created the True Reformers, we didn't talk about this, but he created the True Reformers because he was actually trying to be a member of a white fraternal organization, and they weren't going to let him in. And so finally he kept trying to fight against them. And basically they ended up giving him money to go away and create his own group. So we didn't get into that history because we were focused more on the bank today and the good work he did there. But that's just another example. So a little bit beyond the parameters of our discussion today, but I think it's important. It's the type of thing in The Sum of Us that you can learn more about if you read that book.
Tim, another question online.
Sure.
Have you done any research on Douglas Bank in Kansas City, Kansas, which is now Liberty Bank? Has anyone looked into what that bank meant to the Kansas City economy, especially as it relates to 18th and Vine?
Yeah, so that's the bank Henry Sewing created here in Kansas City, I think in the late 1940s, and that's one of the banks that I thought was going to be featured in the book when I started, and then it just kind of didn't work out because of reasons of flow, and so something we'll be doing. I'm pretty confident we will do more of later. So the 18th and Vine era is a little bit before that. After Douglas is created, I think there is another Black-owned bank that does open in that 18th and Vine area, or another type of savings, maybe a savings institution. And then there's also another bank it's open not far from the plaza that one of the Chiefs players in the early 1970s was involved with. Someone who's more familiar with the community might know a little more of the history on that. But that's something that, is on sort of my to-do list, is to talk a little more about Henry Sewing's experience in Kansas City. He actually wrote a little biography of himself that was like self-published, which I actually bought on eBay, and then I got it. And it was, whoever had it, it was autographed. So it's kind of like all of a sudden I got like a cool historical artifact too. So.
First of all, thank you so much for coming here and talking about it, and sharing all of the research you have done and about the book. My name is Eldor with Commerce Bank. As the early banks were unregulated and then later on became underregulated, what part Feds played in maybe setting certain regulations that would made it more difficult for African Americans to get into the banking, and then later on whether the overall the perception has changed, and whether there is now a better ways of addressing the inequalities that happened.
So a couple of things sort of related to that is, one, so as you think about the idea of creating a bank is a very difficult and involved process, right? So sometimes I give a presentation and then someone will come up to me afterward and say, hey, we'll get some people together and we'll create a bank. So that's a difficult, years-long process to go through and get regulatory approval. And so as you think about an ownership structure, probably more feasible way to do it would be to go out and acquire a bank. But sort of how do we increase minority participation as far as, bank employees at the senior level, even if we bring people in, how do we work someone up through the system is a huge challenge. We're doing a conference next month where I'll be speaking. We'll be talking about some of those issues, but obviously it's hugely important. One of the things that's interesting is when I was in Richmond a couple of years ago, actually, I was speaking to a group there that had a number of Fed employees in the audience. And a couple of them came up to me afterward and said, the distrust of banking in the Black community runs so deep that their own families, their own parents, their own siblings didn't have money in a mainstream bank because they didn't trust bank. And these are people whose children work as Federal Reserve Bank examiners. So that gives you some feel for, how deep the distrust is. And so how do you bridge that gap? And then how do you bridge the next gap to bringing people in as an employee? I mean, those are significant challenges we all in financial services need to be doing much more to address.
Tim, do you know how the local government promotes Black banks or MDIs? How about the FDIC?
I do not know sort of the interaction between government and the banks. I'm just not familiar with that side of it.
Good morning and thank you. You mentioned the words resilient and visionary to describe the early minority-owned banks. Looking at the MDIs now, do you see any trends in them now versus non-MDIs?
So one of the things I meant to mention when I talked about the situation on the south side of Chicago, where the banks were allowing people to they're basically giving people money, trusting they had the money somewhere because they couldn't get to the bank or whatever. That same thing happened in New Orleans after Hurricane Katrina. And that's Alden McDonald, who I mentioned earlier, the banker there. You can go and you can find old New York Times articles. They followed him pretty substantially throughout Katrina and the rebuilding process and the work his bank did. So basically, even though their computer systems were lost or inaccessible or destroyed or whatever, they allowed people to withdraw money, just assumed the people were good for it. And so it was very similar, sort of an echo of what Jesse Binga and some of his counterparts had done, a century earlier. So there's some parallels there, and the same sort of innovation, that same sort of spirit. Leadership matters. Leadership matters at these banks, makes a huge difference. Your motivation, why you do what you do matters. All those types of things. So you continue to see some of that today. I don't know if that sort of answers your question, but we've definitely seen some of that.
Tim, what would happen to the financial and banking systems if African Americans pulled all their money out of the banking systems?
Well, I mean, I don't know what it would mean, on scale, but it would obviously be significant. I don't know that would benefit anyone to pull their money out. I think it's more important to sort of be thoughtful with where you deposit your money and engage with your bank and engage with your banker and know your banker and understand the types of things that your bank is doing and what it's involved with, I think is a more powerful tool as we think about creating economic opportunity.
Tim, earlier in your presentation, you referenced some type of FDIC reporting requirement for banks regarding their community investment. Can you please say what that is again and explain more about it? Is it a high and real benchmark that investors could use as one criteria and determine where to put funding that is intended to support communities which have been historically underinvested in?
So I'm a little confused by the question. Could you maybe start that again there?
So earlier in your presentation, you had referenced some type of FDIC reporting requirement for banks regarding their community investment. Can you please say what that is again and explain more about it?
So banks do have requirements under Community Reinvestment Act. I'm sure there's bankers in the room who could probably speak to that much more than I can as far as how those requirements are, but it is something that, as regulators the Fed goes in and looks at and makes sure people are doing certain things. There's been some criticism of the CRA because of basically some people have said, well, you decide that you're going to serve an area, and then how well are you serving that area? Some banks obviously do a better job of that than other banks, but really a banker would be the person who could speak to that issue more than I could as far as in any detail.
Just curious about something you hadn't spoke about, but was it in your research as far as the correlation between Black banks in a community and the Black economy? And what's the correlation been and looking like today as those banks have dwindled down significantly?
Right. So one of the things, I mean, it kind of went unsaid during my presentation, but recognize the whole reason these banks were created is because you had an economy that excluded an entire race of people, right? So when the banks were created, that gave them a dedicated customer base to start with, but it also, like, there's a hard cap on that too, right? And so it was able to create these communities, but there were limits on how far they could go. And so as you start thinking and you look at some of the later banks, then they start saying, well, we need to draw in a large depositor base. Like, in Detroit, we want to draw everybody in, and then we're going to look more favorably, or we're going to have a bias towards lending in these particular areas. So at that time, you saw these communities created. Now it's a little bit of a different environment. If you look at a place like Denver, which is in our Federal Reserve District, you had a vibrant Black community there that has sort of dissipated for a number of reasons. Some of that because of interstate construction, some of that because people have moved to the suburbs or whatever, so it's a little more diffused in maybe in cities than it used to be. And so that's obviously a challenge. Certainly, obviously, right? Anybody can put their money with any bank that they want to, right? So there's also that too. But you continue to have, neighborhoods that either have, a strong ethnic composition or strong racial history that continues to be exhibited. So banks in those communities can make a huge difference in a lot of ways. Man, I've talked a lot today, Libby.
I've got another question for you. So first, I want to thank you for writing this book. I think there's a large portion of our nation that, saw or believes slavery ended, racism is over, segregation is over, racism is over, and they don't understand the systems that were put into place to hold African Americans back in this country. So writing this history, as you know, is so important. You mentioned if banks move out of these communities, other things move in that aren't great, payday loans, whatnot. Can you talk about the impacts that those types of institutions have on communities?
So sometimes, when I'm giving a presentation, maybe I did it here today, right? Like, I sort of get caught up in the idea that, like, the bank's there and you can buy a house or you can start a business. But, also, like, it's happened to me a few years ago, your basement floods and you need a few $1,000s. We had a tree in my backyard split and we needed like $2,000 so it wouldn't fall on our house, right? So those types of things happen. And if you don't have that cash, if you can't go to a bank and get that within a banking system, then you're going to go down, to some kind of title loan place, and they're going to charge you an insane amount of interest. And it's going to be very hard for you to get out of that relationship. And so if you look at or you need dental work done, right? Like, you have a cavity and you can't eat or whatever. And so you have these costs come up, and that can really start a spiral for people. And so, the book begins with an anecdote of myself and Alden McDonald actually in a van, where the van driver's talking about how important these payday lenders are because he can't make ends meet sometimes. And so he's having to go to them to keep his financial stability. And of course, what he's doing is he's constantly, he's just eating away at his opportunity to find that. And so, hugely destructive to people and can have far-reaching ramifications.
I want to explore cryptocurrencies because I thought it was very interesting. You put on the slide that there is a growing number of people, especially African Americans, that are being more intentional in investing in it. What has your research shown? And I saw that there was a little bit of alarm. What are the things that people need to think about before investing?
So cryptocurrency started getting a lot of attention. It's interesting. I started talking about this book in February. And so like one person would ask about cryptocurrency, and then like it went on and like more people were asking about cryptocurrency. So I went to some of our people who work in that area and I'm like, I'm getting a lot more of these questions. Is this a thing? And so they're like, yeah, it is. And it's a problem. And so we've got people looking into it, but there are people who, for whatever reason, I'm not a Bitcoin guy, so I don't really know how all these things are marketed and sold. But for some reason, the Black community is getting into these to a disproportionate degree. And so when I look at this, to me, this just sounds like what we saw in 2008. It just feels like the same thing. It just feels like housing all over again to me. And I'm, these things, when they go to zero, they're going to go to zero. And so basically we were talking earlier about, I'm putting the sign in the window that says bank, here's my sign that says cryptocurrency. Give me your money. And when it goes away, it's going to go away. And for whatever reason, they've been getting a lot of media attention and it sort of looks like the new thing. People are attracted to it. People aren't really sort of thinking about the downside. It worries me a lot because I feel like I see it coming.
Tim, I
We have
believe
one more question.
yep,
Sure.
we have one more online, and I think it's a good one to end on. They're asking, what was your inspiration for wanting to write this book?
So I have a journalism degree from college. I was a newspaper reporter for 10 years. I just like to learn things and interesting things and interesting people. And I just felt like the more I learned, the more I wanted to tell these stories, the more I felt like they needed to be shared and that people needed to have a better understanding of history. And also that people need to understand that a bank, one of the things you see in the book is these banks touch so many things, from other history. If you're aware, if it's Martin Luther King, if it's the things that happened in Mississippi, if it's the violence on the south side of Chicago, like banks are like right there on the front row time and time again. And so it's helping people sort of think about those relationships. I feel like I've ignored you all these questions now. I'm sorry about that.
It's been great. We've had some great questions in here. So, and I would not have been able to answer them. So we were glad to hear from you. I think we're ready to turn it back over to
at
Greg.
that time. Let's give Tim and Libby a round of applause, please. And with that, we're going to close out today, but I wanted to thank Candace and Felicia, Libby, and Jackie for their sponsorship of these great programs. So thank you, Commerce Bank, for being our series sponsor. Don't forget to join us on October 23rd for our 5th installment of the series. And that is by an author named Dara Horn, who wrote a book called Everybody Loves a Dead Jew. And we will be sending that information out to you. So on behalf of the Greater Kansas City Chamber of Commerce, thank you, everybody. And don't forget, we're going to sign some books, right?
We've got a box of books back there.
And they're free. So make sure you get one.
Totally free.
Thank you.